Good afternoon, folks. My name is Ed Jamison. I'm a CPA located out in the greater Boston area. I'm going to talk to you for the next 45 minutes or so about the special accounting requirements of government contract and grant awards. Appreciate you taking the time out of your day to join me. Got a bit of a head cold, so please bear with me. I will try to keep everybody muted for the first 45 minutes, and then if you have any questions, I'm happy to address them. So without further ado, let me get started. So when I was 14 years old, I came home from middle school one day, and my father announced at dinner that he had lost his job and that he was going to try to start his own accounting firm. And he wasn't sure how he was going to feed the family. And as a 14-year-old kid, this sounded pretty serious to me, so I said, geez, Dad, if there's anything I can do to help, let me know. So when I was 14, he taught me how to reconcile bank statements. By the time I was 16, he had taught me how to prepare corporate tax returns. When I was 18, I had probably a $40,000 book of business of pizza shops, canteen trucks, hair salons, sort of you name it, anything to make a buck, we did it. What I didn't realize was that my dad was a division controller for Honeywell Electro-Optics. He had been a government contract accountant his whole career, and that day, when I was 14 years old, he lost his job because Honeywell had lost a huge government contract, and about 300 people lost their job that day. And a number of the scientists and engineers that my dad had worked with had started their own business. So in addition to doing pizza shops and canteen trucks, we had a number of clients that we sort of became their part-time controller and CFO for. And what I also didn't realize was that a lot of these guys were working heavily in the Strategic Defense Initiative, or what was known as Star Wars back then. So our firm was founded back in 1978. We've been doing this for quite a while. It's been 52, so it's been about 37 years I've been doing this, 38 years I've been doing this. All of our account managers are CPAs with more than 10 years of experience, and I'm going to talk in another slide or two about sort of how to tell one CPA from another. But I can assure you that when we hire CPAs at our firm, it typically takes them 3 years to understand this special lingo that I'm going to try to introduce you to today before they're really proficient in it. Typically in the first year, they're sort of struggling to figure out, you know, which forms to file and why things are important. And in years 2 and 3, they're really starting to understand the issues and why things are important. And then after about 3 years, they're typically to a point where I'm comfortable putting them on a plane when the government auditors show up at your facility to audit you, and knowing that they're going to take care of you. So we currently have about 120 or 130 clients in 27 states. We deal with all different federal agencies and all different types of federal funding awards. So what I want to talk to you about this afternoon is, number one, understanding the different types of accountants. Specifically with the Small Business Innovative Research Program, why a Phase 2 changes everything. Want to talk about which rules may apply to your award. Then we're going to dig in for quite a while about what it means to have an acceptable accounting system. And I assure you that it is far more anal retentive than any of the canteen trucks or hair salons that I dealt with back in the 70s. I'm going to introduce you to the annual incurred cost submission, which I refer to as a true-up report. And the reason I call it that is because when you initially set up your accounting system with the government, they will give you a provisional or temporary indirect rate, and they will reimburse you for your costs on a monthly basis as you bill them. But then at the end of the year, you have to true up to your actual costs. And generally, there's a difference between the indirect rate that you bill the government and the actual indirect rate that you actually have at the end of your fiscal year, which is typically December 31st. So there's going to be a lot of technical information, and at some point you may go brain dead. So at the very end, I'm going to give you a couple of questions to ask when you get back to your office to know whether you're okay or not. They're pretty basic questions, and I think if you just sort of pay attention conceptually, you'll understand why those questions exist. So let's talk about the 3 basic types of CPAs. So typically when I show up at a party and somebody says, what do you do for a living? I say, I'm a CPA, and they immediately start asking me tax questions, because most of the time when people hear you're a CPA, they think, oh, I have to do my tax return. And there's almost this knee-jerk reaction that you do tax work. Well, I'm going to say that tax work it's its own little language, the Internal Revenue Code, and it's almost analogous to Spanish. And it's very important to your business, but it's irrelevant to the cost accounting standards and the federal acquisition regs, or the types of rules that are going to govern the accounting for your award. The second thing I'd like to point out is that if anybody is a CPA, they are generally proficient in what's known as GAAP, or generally accepted accounting principles, and I sort of equate this to being analogous to the French language. The French language is very key to the underpinnings of the federal acquisition regs and the cost accounting standards. If you don't understand GAAP, you're really going to have a problem with the FAR and the cost accounting standards. And then finally, you know, our firm speaks Spanish, we speak French, but what we are really well known for is speaking Greek, which is understanding the government procurement and audit implications of your awards and how the federal government sort of sees you. So with that said, let's talk about why we exist as a firm. So when you get a government award that contains Federal Acquisition Reg, or FAR, 52.216-7, it's known as the Allowable Cost and Payment Clause, you have what is known as a cost reimbursable type award. So in general, the government does business three different ways. There's sort of fixed price, I'll give you 50 cents for a pen. T&M, I'll pay you $50 an hour to dig a hole. And then when the government really doesn't have a clear spec of what exactly it is that's needed, they will give you what's known as a cost reimbursable type award. So they will reimburse you for your, quote, allowable costs, and typically give you a fee. With the SBIR program, it's usually 7%. Typically, you get the commercial rights to the innovations that you have under the awards, and the government will reserve some right to the solution to their problem. So this is the only FAR clause I'm going to hit you with, I promise. But FAR clause 52.216-7 is the clause in the award, whether it's a contract or a grant, that basically says you have a cost reimbursable type award. Now, with a DoD contract, it's fairly easy to read. You may get a 35 or 40-page contract, and there'll be 2 or 3 pages of FAR clauses. And in there, you'll see FAR 52.216-7, and it'll just, now that you're aware of it, it'll be obvious for you to see it. If you're an NIH grant recipient or an NSF award winner, buried in the terms and conditions, you will see this hyperlink to the NIH grants policy statement. If you click on that hyperlink, it will take you into several hundred pages of award terms and conditions, and each one of those pages may have, you know, 10 or 12 hyperlinks, so you're basically being pushed into thousands of pages of regulations. And if you're like most people, you'll spend an hour or two and at some point give up and say, you know, I'm just going to go work on my technology and worry about this stuff later. So in general, you're going to need a Greek CPA who understands FAR 52.216-7, because they are almost always embedded in SBIR or STTR Phase 2 awards, ARPA-E awards, RO1s, broad agency announcements, and BARDA awards. So I can't guarantee that you have FAR clause 52.216-7 embedded in your award, but 99 times out of 100, you have a cost reimbursable type award if you have any of the awards that you're seeing on the screen right now. One of the other things that I want to make sure that you're aware of is there's different levels of government rules. So in general, the Federal Acquisition Reg, or FAR, and the Cost Accounting Standards, CAS, are regulations that apply across every agency. So they're the underpinning, it's sort of the basic language of the government. Each agency then has the right to issue their own supplemental regulations, and they do. So as an example, the National Institutes of Health have a salary cap of about $200K, DOD's is about $500K. NIH will not reimburse you for internal research and development costs, DOD will. NIH will not reimburse you for your patent costs. DOD will if you take certain steps. So each agency has their own particular rules. Then specific funding award vehicles, the ARPA-E's, the BAA's, the SBIRs, will also have program-specific rules attached to them. So as an example, the SBIR program, there's sort of this, percentage of U.S. citizens that need to own the company. With ARPA-E, there's almost always at least a 20% cost share involved with those types of awards. So I don't want to get too specific about anything here in particular. I'm just trying to give you an overview. There are different levels of rules that you're going to need to comply with. So let's assume that you have one of these awards and you have to start dealing with this anal retentive accounting, as I like to refer to it as. What you're going to need to do is make sure that you maintain what I like to call an acceptable accounting system. So in general, what you have to make sure is that your general ledger or your accounting system can properly segregate whether a cost is direct, indirect, or unallowable. So in general, a direct cost is something that if it weren't for this project, I wouldn't have incurred this expense. An indirect cost is something that tends to benefit the entire business, and an unallowable cost is something that the government just strictly forbids. We will not reimburse you for alcoholic beverages. We will not reimburse you for federal income taxes. We will not reimburse you for penalties. So there are just a laundry list of things that the government just won't reimburse you for. So one of the things that the government is keen on is using a numbering system because you and I may have different nicknames for our project, and we may call it something different, but we're really talking about the same thing. But if I said, let's charge this to account 5003, everybody's pretty clear that we are absolutely talking about this specific project. So the government likes to see your accounting system set up with numbers so that there's no misunderstanding about what we're talking about. So when we set up your accounting system, typically the 1000s will be your assets, your 2000s will be your liabilities, 3000s will be your equity, 4000 is revenue, 5000 will be your direct costs, 6000 will be your fringe costs. If it weren't for an employee, I wouldn't have these expenses, payroll taxes, pension plans, health insurance, things like that. 7000s will be your indirect expenses, and 9000s will be your unallowable costs. So that's a real quick overview of sort of the skeleton of the accounting system. Now, one of the things that you need to be extraordinarily aware of is that labor costs tend to be the most important cost to track. They tend to drive all activity. So at some level, if you called me and said, hey, Ed, we need to reduce our expenses, I mean, we may be able to like downgrade to a smaller facility or use less paper, but at some level, real expenses are driven by people. And that's not lost on the government. So you're actually required to maintain timesheets. So everybody in your organization, if you're going to try to get reimbursed by the government, has to maintain timesheets. Now, if you're not trying to get reimbursed get your costs reimbursed by the government, you don't need to use a timesheet. But I don't have any clients that don't want to be reimbursed for their costs, so they actually must maintain timesheets. So what's going to happen, and we'll get into this in the next slide or two, we're going to show you how to account for how people spend their time and how to spread the cost of that labor into your accounting system or your general ledger. All of this stuff has to tie. It has to reconcile. It's very detail-oriented. So let's talk about, number one, a timesheet policy that you have to have. So the government actually mandates this. So first of all, if you read the Federal Acquisition Reg, it says you need to fill out your timesheet in ink on a daily basis. You have to record all the time you work, and you have to sign off on your timesheet. Your supervisor needs to sign off on your timesheet, and any changes need to be crossed out, not erased, and initialed. Now, the reason they do that is because labor costs are so important to the total cost of a project that if you worked in my business and you filled out your timesheet and I realized that your project didn't have any budget left on it, and I just took out my eraser and I erased, the 8 hours that you charged to that job and charged it to something else, that would have a tremendous manipulative effect on your cost accounting and on the project costs of the government. And it's called fraud. And the government is very concerned about it. So these policies exist, and this is exactly how they're written. Now, the government doesn't mandate in real life, they don't mandate that you maintain a manual timesheet. I would say probably a third of our clients maintain manual timesheets. Electronic timesheets that do the same thing, so they create this sort of forensic audit trail. As long as your electronic timekeeping system does these 4 things, it's probably fine. The government will never say, like, this is approved, but I can assure you that if you're using Deltek or Uninet or Spring Ahead and you're using it properly and you're maintaining it, you're probably fine. So just to sort of dive in here and let you understand how anal retentive the government is about labor costs, I'm going to talk about a policy that you need to have in order to maintain an acceptable accounting system, and you need to have an uncompensated overtime policy. So the first question that probably goes through your mind is, what the heck is uncompensated overtime? So let's pretend that we have a company, it's XYZ company, and I hire you and I pay you $80,000 a year, and I know there's either 2,080 or 2,088 hours in a year, but to make the math easy, let's pretend there's 2,000 hours. So you're effectively making $40 an hour. So you're going to do 10 hours worth of work, and I'm going to bill the government 10 hours at $40 an hour, so I'm going to bill the government $400. So I'm going to bill the government at that hourly rate. And then at the end of the year, we add up all your time and we realize, gee whiz, you actually didn't work 2,000 hours, which was the assumption that we made. You worked 2,500 hours. And remember, this is a cost reimbursable type award. So the government's going to reimburse you for your costs. So you charge them $40 an hour, but your actual cost was $32 an hour. So you overcharged them by $8 an hour because somebody worked overtime and weren't compensated for it. So there's a number of ways to remedy this. And the 3 most popular are, number 1, you can pay people for overtime. Now, in most bootstrapped startups that we deal with, that's not an option. I would say probably 2 or 3% of our clients actually pay for overtime. Number 2, you can change the billing rate that you bill the government at every month. Now, I'll tell you, if you maintain manual timesheets, this is just a recipe for disaster. A lot of the electronic timesheets do this quite nicely. So you're actually not going to charge the government at the $40 an hour. You're going to charge them based on whatever the hourly rate is for the number of hours that person worked for the month. And the third way to deal with it is to take the overbilling and credit it into the indirect rate pool. So if your actual indirect rates for rent and utilities and things like that are running at 120%, and you credit the government back that $8 an hour for all the overbillings, the indirect rate may shrink from 120% to 110%. And theoretically, that's fair because you're allocating those costs back to all the projects proportionally. So that's a perfectly acceptable way to sort of deal with uncompensated overtime. Now, I speak nationally at the SBIR conference once or twice a year, and I've been doing this for a while. And generally, I start to like look at the audience, and there's people kind of poking each other. And I, you know, in general, what they're saying is, let's just write 8 hours on our timesheet, and then we don't have to deal with this stuff. And I got to be honest with you, a lot of companies do that, and I'm not sitting here passing moral judgment on people, but when you're a 2-person company and you're both, you know, sort of working out of the garage and you're doing whatever it takes to make the company get off the ground, that's kind of one thing. But as you grow, it's incredibly inappropriate to create a culture where you're basically asking people to work 25 hours a week, 2,500 hours a year, and only charge 2,000 hours. So I'm going to tell you a sad but true story of the MIT professor. So I had a client probably 20, 25 years ago. He was an MIT professor, tenured professor, brilliant man, really pleasant guy, had some really interesting technology, just mellow, soft-spoken, really gentle man. He was the CEO of the company, and he was really sort of the CTO as well, the Chief Technology Officer as well. As his accountant, I got to deal with his CFO, quite a bit as chief financial officer, who was his wife. And his wife was annoying, abrasive, loud, nonstop talking. I mean, when I used to visit them, I could talk to him all day. I could tolerate her for about an hour, and then I just had to get in my car and drive back to the office because she was just unbearable. And I often kind of thought, geez, I wonder how these two kind of coexist as husband and wife. And then one day, the MIT professor asked his wife for a divorce. And the next day, there was a knock on the door. DCAA auditors here. We're here to do a surprise floor check. And for any of you who aren't aware of a surprise floor check, and we actually do a webinar on understanding the different types of government audits. And if you're going to be in this industry and use government funding to build your business, I strongly recommend that you attend all of our webinars. But basically, a floor check is when the government shows up and makes sure that people are working on what they say they're charging their timesheets for. So the auditor basically came in the door and said, hey, there's 4 employees that we'd like to interview, and they immediately went to a PhD on the first floor, and they asked him, what are you working on? And he effectively said, I'm working on our commercial technology. And then they asked him for his timesheet, and it said he was charging a cost-reimbursable SBIR Phase 2. And they said, why are you charging an SBIR Phase 2 and working on the commercial technology? And he said, well, the professor, the CEO, told me to charge all my time to this job until it was out of money. And the auditor pressed him on it, and this was back in the day of the inter-office memo, and he said, you know, here's the memo from the president telling me to, you know, make sure I charged all my time to that job until it was out of money. Well, the auditor's jaw practically fell off his face. He couldn't get back to the office fast enough. The government shut off the company's ability to bill the federal government, and they blackballed them from any future activity. And that MIT professor is now happily divorced and working for one of his research assistants. So to close the loop on payroll costs, at the end of the year, so in theory what's happening here is you get a government award. In your proposal, you're estimating your cost to the best of your ability, and at the end of the year, there's this true-up report, an incurred cost submission that you have to prepare, and you have to submit to the government that basically says, hey, look, here is this incredibly in-depth report and all the costs that ran through my system. Please feel free to come on in and audit me at any time to make sure that I haven't overcharged you. Now, the government will always allow you to undercharge them, but if you want to overcharge them, you're going to have a real problem. So one of the key schedules here is a reconciliation of the payroll costs that went through your general ledger, which is maintained on an accrual basis, versus the amount of payroll that gets paid from the 941s or your payroll tax returns, which is a cash basis. So there's the accrual basis. So these are all the ledger, these are all the general ledger accounts that capture your labor costs. And then you have to account for all of the accrued expenses. So as an example, you might have paid payroll for the month of December on January 5th. So those are actually costs for December, and they belong in the December cost bucket, even though they weren't paid until January. People should be charging the government for, based on your vacation policy, as vacation is earned, not as it's taken. So this reconciliation schedule goes to the federal government, and they will test it to make sure that it's accurate, but it shows you the level of in-depth reporting that the government is looking back to you for. So to give you a quick overview of sort of a lot of the other direct costs that we see that are important, direct consultants, and we'll get into sort of what the government's hot buttons are if you attend our Audit Trends webinar, where we give the overview of the different types of government audits. But in general, consultants and subcontractor costs are being examined incredibly carefully these days. And consultants, if you just step back for a minute, how do I know this person didn't just build a front porch on your house? So the government wants to see the consulting agreement with an hourly rate and a detail of the scope of work, and then they want to see the invoice where the person provides the detail of the amount of hours worked and what work was performed. So think about it as if one of the things that you have to really sort of understand is your accounting records need to stand on their own. So if your accountant gets run over by a bus on the way home, your accounting records need to speak for themselves. So audit time is not storytelling time. It's time to pull out documents and demonstrate proper documentation of cost charging in your accounting system. Direct materials, so you need to have a vouchering system where you're approving and signing off on costs that are properly coded. With travel costs, you need to understand, you know, I like to stay in the Ritz-Carlton. The government's not going to pay for you to stay in the Ritz-Carlton. They're going to pay for you to effectively stay in a Days Inn. So the government publishes a per diem rate based on where in the country you're traveling of what they will reimburse you for. And they're not typically great places. They're not, you know, terrible, but they're, you know, they're not something that you're going to want to bring the family to. And then subcontractors, obviously looking for a signed subcontract agreement. And if the award is for more than $600,000, you need to make sure that you flow down all the cost provisions of your award to your subcontractor. Your subcontractor is going to be held to the same standards you're held to, and you need to hold them accountable. That's your responsibility. So, and that's actually one of the most common audit findings, especially with an OMBA 133 audit that relates to grantees. So one of the things I like to do is play a really sort of quick game with people. Is this cost direct, indirect, or unallowable? So expenses that are not in the original proposal, some people get hung up, hey, I didn't propose that cost, therefore it's unallowable. I have never in 37, 38 years seen somebody write a proposal and predict the future with 100% accuracy. So the government doesn't expect the actual work to be performed exactly as you proposed it. In fact, they don't want you to come back to them and say, mother, may I rebudget this, may I rebudget that. So typically, you're going to have provisions in your award that allow you to rebudget. I did a talk for the Principal Investigators Association a few years ago, and I got a call back from one of the participants a week or two later, and he said to me, Ed, is a lab jacket a direct or an indirect cost? And I thought, well, geez, typically when I think of a lab jacket, I think of somebody wearing a white jacket that protects their clothes, and they wear it around the office, and it sort of, quote, benefits all of the projects. But rather than give him a knee-jerk reaction, I said, well, that's kind of an interesting question. Why do you ask it? And he said, well, we do this particular bovine experiment, and every time we do it, it destroys our lab jackets. And for those of you who don't know what bovine is, it's cattle. So you can imagine they're doing something to the cattle that's destroying the lab jacket. And I said, whoa, that's the very definition of a direct cost. If it weren't for this project, I wouldn't be incurring these expenses. So in his particular case, a lab jacket is a direct cost. And one of the things that I really want to point out here is what's a direct cost and an indirect cost for somebody else may not be a direct cost or an indirect cost for you. It's always case specific, and you always need to be your own advocate when the government audits you. Medical and dental insurance, vacation, holiday, and sick paid time off, company contributions to retirement plans. All of these things are fringe benefits that you're going to provide to your employees to make them show up for work every day. And the reasonableness of those costs is really dependent upon where you are in the country and what's sort of normal and customary. So as an example, if you're in Silicon Valley and you're competing against Google and Facebook for employees, and they're picking their employees up at home, driving them to work, feeding them, and taking care of their dry cleaning, you're going to need to give them a pretty good benefits package to lure them away. If you're in the middle of the country and there's no such competition and you're overly rewarding your employees, you're going to have a hard time explaining to the government why that's necessary. Typically, when you think of rent, rent is an allowable expense. But when you think about it, you're typically renting from somebody else. So there's this notion of there's an arm's length transaction because two parties agree to a price and they're not related. But what if you're the landlord? We have a number of clients who have special facilities because they have special needs, and they're effectively the landlord. So there are special requirements when these kind of self-dealings exist that you have to be aware of. Accountants and lawyers, typically an accountant's cost is an allowable expense. It's almost always an indirect expense. If you were to hire us it would benefit all of your jobs, although we have some clients that hire us to just help prepare the government billings for certain government projects. Really, the only time an accountant's cost is going to be unallowable is if I were to prepare your corporate tax return to try to do some estate planning for you, which our firm doesn't do. There's no benefit to the government of me doing that, so that cost is unallowable. Lawyers, on the other hand, are really kind of an interesting grab bag. So ultimately, the question is, does the federal government benefit from this or not? So if you hired a lawyer and paid them $40,000 or $50,000 to help you raise a couple of $1 million of VC money, the fact that the purpose of hiring the lawyer was to change hands of the ownership of the company, so instead of you owning 100% of the company, you've diluted yourself and now you own 80% of the company. The government doesn't care who owns the company. There's no benefit to the government for somebody else to own part of the company. So they see that $40,000 or $50,000 as unallowable. There was no benefit to us. H-1B visa costs. I see a lot of SBIR awardees. It's supposed to be this Made in America program, and you Buy America Act, and I've had situations where clients have these really specific technical needs, and they wind up sponsoring somebody's H-1B visa, and they'll pay a lawyer $5,000 or $6,000 to sponsor somebody. Listen, you exhausted all of the normal, reasonable channels to hire an American. Those H-1B visa costs are perfectly reasonable and allowable. And patent costs, we've talked about that a little bit at the beginning. Depending on which agency you're dealing with, they will or will not reimburse you for those expenses. So one of the things that happens when you're writing your proposal is you have to sort of come up with your direct costs for labor and materials and consultants, subcontractors, and then you have to apply an overhead rate. And it's really your best guess as to what you think your indirect expenses are going to run at, and the government will come out and do a pre-award audit, and if you don't have a record with them already. And they'll basically take a look at your projections to see whether your projections are reasonable or not. And then they'll allow you to bill them on a provisional or temporary basis. But at the end of the year, there's this true-up report that needs to go into the federal government that basically shows these are my actual expenses. So you'll see in this situation here, and this is a schedule that goes into those incurred cost submissions. So all of the indirect expenses from the general ledger are dropped into the schedule, and then unallowable expenses are specifically pulled out, and the claimed costs or the allowable costs that you're going to charge the government are in the far column to the right. And basically what you're saying to the government is, we believe that these are all allowable, reasonable, and allocable, and you should reimburse us for all of them. Now, if you've been billing the government at 100% overhead rate and your actual rate comes in at 131%, you have the right to bill the government for those expenses. I'm not sure you're going to have a good relationship with this customer for a very long time if you hit them over the head with a 31% surprise. So it's really important that you do a good job of projecting the right indirect expense, and you monitor yourself and adjust yourself as necessary. So as an example, if I proposed at 100% and I was running at 131%, I would really start to look at myself in the mirror and say, is this a structural change from what I thought back when we wrote the proposal, or is this just a cyclical change? So you really have to understand sort of there's a whole psychology to how indirect rates work, and that's why we dedicate a 1-hour webinar to understanding indirect rates. So again, I'll get to that at the end of the seminar. There are a number of webinars that we have just to help you sort of understand what you're getting yourself into. The government is a fantastic customer. They always pay their bills. They can be a little bit of a pain, but you don't dilute yourself while you're figuring out what your technology really is. So you'll notice that at the end of the day here, we've got some indirect expenses. We pull out the unallawables. So in this situation here, we've got a simple overhead rate where our indirect expenses are divided by direct labor. We come up with this rate. And in the next schedule, we take that 131% rate and we apply it to all the jobs based on direct labor, because that's how we set up our accounting system. That's how we thought the most fair method was to allocate overhead expenses back to the jobs. Now, you may have an overhead rate. You may have an overhead and a G&A rate. You may have a fringe and overhead and a G&A rate. The National Institutes of Health generally prescribe that you have a fringe and a modified G&A rate known as an F&A rate. So there's really 4 typical ways to allocate indirect expenses to your cost type, to all of your awards actually. You need to make sure that you set up your accounting system with the right indirect rate. So again, if you're not familiar with how overhead rates work, how indirect rates work, please consider attending our webinar on understanding indirect rates. But you'll see basically this $439,000 from this other schedule, the indirect expenses, is all being charged to the various jobs. So I've got job 1, 2, 3, 4, 5, and here is the labor cost, 332, 332. So the indirect expenses are all proportionally charged to the jobs based on labor. So that, and this is a small software company, and really what drives their indirect rates are labor costs. So this is a simple, easy way for them to recoup their overhead costs. Manufacturers are certainly going to want to have a G&A rate. You know, the whole psychology of, you know, how to structure your accounting system indirect rates, I could talk about that for another hour. But in general, it's important that you understand that at the end of the day, there's this true-up process. And this schedule that you submit to the government has a 100% chance of being audited. Whether you go through a desk audit or a formal in-person audit, we talk about at great length in our webinar on understanding government audits and trends that we're seeing. So just to strike the fear of God into you, if you're not already intimidated by all of this anal retentive detailed accounting, what I really want you to understand is that any employee or anybody who blows a whistle on you is able to recoup 15 to 30% of the recovered damages. So several years ago, there was some research going on through Northwestern. They got tagged for $3 million, and the woman who blew the whistle on them got a check for almost $500,000. That might seem a little bit out there to you, so let me bring it home a little bit. There were a couple of professors at the University of Houston who were indicted in 2014. There was a 1 count of conspiracy, 7 counts of making false statements, and 21 counts of wire fraud, all in connection with the SBIR program. According to the indictment, the 2 men started integrated microsensors, a small business applied for and received SBIR grants and contracts from NASA, NSF, Department of Energy, and the U.S. Air Force. Officials said if convicted of the conspiracy, both face up to 5-year prison terms as well as 5 years for making false statements. For the wire fraud charges, the men faced up to 20 years for each conviction and were also subject to a possible $250,000 fine. We actually were called in to testify on behalf of integrated microsensors, worked with their attorneys, obviously wish they had hired us 10, 20 years ago. Both men were convicted. And in fact, one was also, and this is public record, one of them was also subjected to a $100,000 fine, and they were given prison terms. So this is not a joke. There are real consequences to making sure that you understand how these rules work. So in summary, if you have an SBIR, STTR Phase 2, RO1, BAA, ARPA-E, or BARDA award, they almost always contain FAR Clause 52.216-7, which is known as the Allowable Cost Clause. That clause means you have a cost reimbursable type award. You're going to need to maintain a Federal Acquisition Reg or FAR compliant acceptable accounting system. The government auditors can literally show up at your door at any time, so your records need to be always audit ready. If your accountant gets run over by a bus, the records need to be able to stand on their own. And one of the things that you need to be aware of is that you need to prepare an annual incurred cost report, which has a 100% chance of being used, 100% chance of being audited, and is used to negotiate your indirect rates. So with all that said, sort of here are the 2 questions that I really want you to think about when you're talking to your accountant. So a lot of information here, but in general, first question you ask your accountant, hey, can I see the job cost report that you use to invoice the government? Now, a job cost report needs to come out of your accounting system. So it's not an envelope, it's not written on the back of an envelope, it's not written on a napkin, it's not written on a piece of, paper. it needs to come out of the accounting system. And it looks sort of like the proposal you sent the government. Here's the direct labor cost, here's the direct materials cost, here's the overhead at the provisional or temporary rate that we established with the government when we said we were going to bill them, and here's the total amount billed. So if you get one of those, and let's say that you have you're provisionally billing the government at 100% overhead rate, you ask the person who handed you the report, the accountant, you say, how are our actual rates running versus what we're billing the government? And they should give you a number, 79, 121, 42. It's not an I'll get back to you. It's not an I'm not sure. It's not a that's next week's project. You need to be maintaining your indirect rates on an ongoing basis. And you also have to sort of be aware, are we at the beginning of the year and we just did a lot of proposals so our overhead rates are high, or it's the summertime and people are taking vacation, or we're in proposal writing season so there's less labor, direct labor going on and more indirect labor going on, so I expect the rates to be spiking, or are we grinding towards the end of a project and the indirect rates are running low? So what we really look for is how are your indirect rates. You know, we sort of equate it to landing a plane. So I have to land the plane at midnight on December 31st. So if you bill the government at 100% overhead rate, I want the overhead rate to come in at 100.00%, because if you overbill the government, they're going to want their money back, and if you underbill them, you're going to surprise them. So it's really important that you do a good job of projecting the right indirect rates for your business, and then monitoring and taking corrective action if you're not achieving those results. And if structurally something's changed, you need to go back and figure out why and then resell it to the government. So if somebody can't hand you a job cost report and can't tell you how the indirect rates are running, I can assure you, you do not have an acceptable accounting system. So what do we do here at Jamison & Company? Well, obviously we help people with their indirect cost rate development. So if you're getting ready to write a proposal and it's going to be a cost reimbursable award, we have a product that we use to help people with that. We do the financial negotiations on your behalf with the government officials, the government auditors. We talk to contracting officers, administrative contracting officers, and grant specialists on your behalf. We help you set up your accounting system, train your people, and provide periodic oversight. Some of our clients outsource their entire accounting department to us. They just find it to be more cost effective because they're buying part-time people they don't need to house and they don't need to provide benefits to. We obviously will prepare those annual incurred cost reports or true-up reports and obviously represent you during all your government audits. So that's really what, at the core, what our firm does. We've got a couple of webinars coming up, understanding indirect rates and the types of audits and trends that we're seeing. We've got an event we're scheduled for March 24th in New York City, if you're in that area. I think we just booked to do the National SBIR conference. I want to say it's in May down in Washington, D.C. So with all that said, I'm going to stop talking, and I am going to allow people, if you want to reach over and raise your hand if you want to ask a question, I will unmute you, and I will see if I can help you. I see we have a lot of shy people. All right, Brian Hart, let's see. Brian, hi, how are you? Brian, are you there?
Yes, I'm here.
Hey, how are you?
Good.
Fire away. What kind of question do you have?
I don't have a question.
Oh, you had your hand up.
Oh.
You sure you don't have any questions?
I'm positive. Thank you.
All right, thank you, Brian. All right, let's see who else has their hand up. Paul J. Paul. Let's unmute Paul. Hey, Paul, how are you?
Good. Can you hear me?
I absolutely can hear you, Paul.
Okay, my question is, so I do have a chart of accounts set up, and we're using the numbering system pretty consistently, but how strict is the government about the specific, number series that's being used to track, for example, 4,000 for revenue? What if we were using 3,000 from before? Do they just more care about consistency, or is it?
Oh no, they
specific numbers?
care more about consistency. I mean, that's our mentality. If we were to set up your accounting system, because I want you to understand that there's that rigidity to it. But whatever makes the most sense for your company is what you want to do.
Perfect. Thank you.
Sure. All right, let's look for another hand up. Craig G. Craig, are you there?
I am. Can you
Hi,
hear
how
me?
are you? I
Good,
can.
good. How are you?
Good.
I have a question for you. We have an SBIR contract now, but it's firm fixed price.
Yep.
And one of the things that's always that happens with us is I don't actually get paid a salary. I get paid what's ever left over.
I hear you.
So some months I don't get paid at all.
Okay.
I'm not saying I like this, but I'm just saying that's the way it works.
Sure.
So
not uncommon, to be honest with you.
So the question is now if we did get we think we're going to get another phase 2 with a cost plus fixed fee type contract structure. So
Yeah.
so how do I justify how can I justify a salary? Because obviously, if I was working for someone else, I'd be making more money than I would be working for myself.
Sure, that's a great question, Craig. The answer to that question is the government will reimburse you for your paid expenses. So if you don't pay yourself, the government won't reimburse you. In fact, they will thank you for your free labor.
So this is the conundrum. So on the one hand, you got to get the technology developed. You have a certain bucket of money, right?
Yep.
But you don't want to. You don't really plan on working for. You can do that for a while, but you can't work for free forever.
I would agree.
How do you plan that?
Well, one of the things that I talk about in some fairly great length when I talk about projecting the right indirect rate is at some point a project turns into a business. And if you don't recognize, if your technology starts to work and this thing starts to turn into a business, if you set it up so that structurally you're not getting a salary, then you're not getting a salary. So you need to make sure that you're financing your business properly. Now, you've read Inc. magazine, I'm sure, and you realize that one of the biggest reasons that businesses fail is because they're undercapitalized. That's not different for your business or anybody else who's in on this call.
Sure.
So you need to make sure that your business is properly capitalized, and whether that means borrowing money, diluting yourself, using some of your life savings, credit cards, sort of we see it all. Mm-hmm. But I will tell you that the key to the thing is to project the right indirect rate and then to monitor how you're doing and to be very aware of sort of the things that you do to bring in cash flow that's positive as opposed to negative. When you've got a fixed price contract, it really doesn't matter other than it's all about survival.
Right.
And I'm glad you asked the question because this is really common. If you're going to use government funding to develop your technology, you need to have a strategy of how you're going to get paid. And if you don't have a strategy and you don't incorporate that into your indirect rate projections and into your proposal writing, you're not going to get paid. Because I've been doing this for 38 years, and I can't tell you the number of people who tell me, hey, I'm going to develop this technology, and it's going to be, I'm going to do it with $1.5 million, and $20 million later, they finally have developed some niche product. I mean, these things never turn out the way you thought.
Yeah.
Some of the greatest inventions are sort of mistakes. So you really want to make sure that you structure things properly. I appreciate the question. You really sort of helped sort of sell me on, making sure I attend the Understanding Indirect Rates webinar. We actually have an indirect rate projection template that we give people. So we have an $895 product, which we basically will send you an indirect rate projection template. Well, first of all, we'll understand your business and make sure that you set up the right indirect rate structure. help you project the right indirect rates and write that proposal. But I will tell you that if you don't attend the webinar, you're not going to understand. There's a psyche to something called the multiplier, which is at the end of the day, you take $1 of direct labor and you add your overhead to it, and that's ultimately the total amount that you charge the government. And most people dramatically underestimate what their indirect rates are going to be and dramatically underbid their indirect expenses. I think our statistic was 98.3% of people dramatically underestimate their indirect expenses. So if you're right around the corner from writing a proposal, I would give Peter Conboy a buzz. If you've got the time, check out our Understanding Indirect Rates webinar. I think it's an hour of education that's really going to be beneficial to you, sort of understanding how the government sees your indirect rates. Most people are way too sensitive to their indirect rates, so I appreciate the question. It was a great one. I've got time for another couple of questions. Lisa L. Lisa, are you there? I've got Lisa L. with her hand up in the air. Lisa L., are you there? I am going to mute Lisa and find somebody who is willing to talk to me. It's kind of tough to bring your dirty laundry out in public, so let's see if anybody else has their hand up in the air. All right, I've got two Toms, so I'm going to go with Tomas K. Tomas, are you there?
Yes, I am.
Hi, how are you?
I'm doing great. So my question is the software packages that you guys are experienced in using, and specifically any comment on using either QuickBooks or QuickBooks Online to do this DCAA compliant accounting?
Thanks, Tomas. That's a great question. So we see all sorts of different accounting software. If you were going to do more than 50 or 100 million in revenue, you'd probably be looking at something like Deltek CostPoint. That is the Mercedes-Benz S550. And I'm talking in great big generalities. If you're going to do more than 10 million in revenue, you probably want to use something like Uninet. Most of our clients are smaller. They're doing somewhere between, $500,000 and 5 million in revenue. And typically what you're using is QuickBooks Pro. We hate QuickBooks Online product. It's very limited. QuickBooks Intuit pushes it. It's a horrible program. So we're big advocates for QuickBooks Pro. It's a $299 software program that will not do everything that you want, but there are ways to get it to do most of what you want and ways to teach you how to get it to do the rest. So it's a decent product. It's not great, but it'll get the job done, and I want to tell you it's probably $299. So, the other question we get asked a lot is what kind of electronic timesheet software do we like? I mean, Deltek, obviously, if you're a big company, has a great online electronic timekeeping system. We're big fans of Uninet. They've been around forever. They've got tons of government contract and grant clients. They do a real nice job. We like Spring Ahead. It's a relatively low-cost electronic timekeeping program that works. There are several others. I will tell you, though, that this is a discipline. It's not a, hey, I went into the store and I bought this software package, so now I have a compliant timekeeping system. We actually had somebody come in our office about a year or so ago, and he had, I don't remember what exactly the program was. Let's pretend it was Spring Ahead. And, he said, oh, no, I have a compliant timekeeping system. I've got Spring Ahead. And we said, no, you haven't filled out a timesheet for over a year. This is an ongoing discipline. It's not a software program. It's an ongoing discipline. So one of the things I want to make sure people are aware of is that it's important that you have an ongoing discipline to maintain your accounting system. It's not a software package. That's just part of the solution. So that's a great question. So how about Tom L? Tom, are you there?
Yes, I am, but great Tomas and I think alike. Mine was a QuickBooks question as well.
Oh, okay. So you good?
Yes, I am. Thank you.
All right. Thanks, Tom. All right, I've got time for one more question. Let's see if I see any hands up here. All right, I've got Annie D. Annie, are you there? Annie D. I don't think Annie wants to talk to me. Annie, are you there? All right, I don't think Annie's there. All right, folks, well, I think that's all the time we have for today. I'd like to thank you for coming out and spending an hour with me this afternoon. I want to make you aware if you get to jamesoncpa.com/resources, there's a number of white papers that we've written that you can use to educate yourself. We run webinars on a fairly regular basis. We tend to have events in the Boston, New York, Chicago, Silicon Valley area, UT Austin type of thing. I tend to speak at the National SBIR conference, so you may catch me there. Always happy to talk to people and see if we can be of service. I appreciate everybody coming out today and wish you the best of luck. Thank you.